there is one rule in speculation that separates the winners from the losers, it is the rule of consistency. Without it, you are nothing but a gambler tossing coins into the wind, hoping one of them lands heads up. With it, you give yourself the only chance a trader really has in this game. You may think the market is about finding the big trade, the one that pays for everything. But let me ask you, what good is a single big win if the very next week you give it all back because you couldn't control yourself? The market has no memory, but your account surely does. Every dollar you lose has to be earned back, and that climb is steeper than the fall. Did you ever notice how a 20% loss requires a 25% gain just to break even? Think about that for a moment. The man who is consistent never puts himself in that hole. He chips away, patiently, steadily, building a foundation. That's why consistency is not just a word, it is a law, as sure as gravity in this business. Now, you might be asking yourself, but Jesse, how do I become consistent? The answer is not in chasing every tick or every tip. The answer is in building habits that you do not break. When I traded stocks, I followed rules the way a soldier follows orders. If I said I would never add to a losing position, I never did. If I said I would wait for confirmation in the tape before entering, I waited. Do you see the point? The market punishes the man who makes exceptions to his own rules. Let me tell you something, every trader has good trades and bad trades. Even the greatest operators take losses. The difference is this: the consistent trader keeps his losses small and his methods steady. The inconsistent trader lets one loss swell into disaster and then spends the rest of the year trying to dig himself out. Which one would you rather be? Look at the charts and you'll see what I mean. A stock moves in trends, it builds bases, it breaks out, and it pulls back. These patterns are not new, they've repeated for 100 years, and they'll repeat for 100 more. But the trick is not spotting them once, it's trading them the same way every time they appear. Do you think a professional operator wakes up each morning asking himself whether he should abandon his plan and try something wild? Of course not. He sticks to the plan because the plan is what keeps him alive in this game. You know, when I first came to Wall Street, I thought I could outsmart the market by being clever. I wanted to be faster than the next man, more daring, more willing to take a chance. That worked for a while, but eventually the market took it all back, and then some. It wasn't until I learned the discipline of consistency that I started making real money. Not gambling money, not luck money, real money that stayed in my account. Isn't that the kind you're after? Now, I'll tell you something else. Consistency is not just about entries and exits, it's about your entire approach to money. If you treat your capital like a plaything, the market will snatch it away from you. But if you treat it as a soldier in your army, if you guard it and command it with discipline, then it will fight for you day after day. I used to think of each dollar as a loyal worker. Why would I send my best worker out into a foolish scheme with no plan? That's not trading, that's suicide. Take a look at the men who fail in this business. They always have the same story. They start with a plan, then the market throws them a curve. Instead of holding steady, they abandon their rules. They double down when they should cut losses. They chase when they should wait. They let fear and hope dictate their decisions instead of reason and method. Tell me, have you ever caught yourself doing the same? If you're honest, you probably have. Every trader has at some point. The difference is whether you learn from it or keep repeating it until you're broke. You see, consistency is not glamorous. It's not the kind of thing that makes headlines in the papers. The papers love to write about the man who doubled his fortune in a week, or the trader who bet everything on a single stock and won. But they never write about the man who quietly earns steady profits month after month, because that story doesn't sell papers. But let me tell you, who do you think survives in the long run? The gambler or the steady operator? Charts don't lie. They tell you what's happening, not what you hope will happen. The consistent trader respects the chart. He reads it like a book, waiting for the right chapter to unfold. The inconsistent trader tries to guess the ending before the story is written, and when the market proves him wrong, he blames the stock, or the tape, or the news. But the truth is, he betrayed his own method. And once you betray your method, you've lost the only real advantage you had. There is a saying in this business, it's not the big trade that makes the fortune. It's the series of small, steady trades, managed with discipline, that builds wealth over time. That's the truth no one wants to hear. Everybody is searching for the one stock that will make them rich overnight. But the men who actually become wealthy are the ones who stick to their system through thick and thin. Let me ask you, are you in this game to gamble or to build wealth? When you think about consistency, don't confuse it with stubbornness. A stubborn man will hold a losing stock because he refuses to admit he's wrong. A consistent man will cut that stock the moment it breaks his rule. There's a world of difference. One digs his own grave, the other lives to fight another day. Which one are you right now? Let me tell you another truth: consistency protects you from yourself. Every trader, no matter how skilled, has emotions. Fear and greed never disappear, they just find new disguises. The only weapon you have against them is your set of rules, applied consistently. You don't fight fear by being brave, you fight it by being methodical. You don't beat greed by wishing for less, you beat it by obeying your stops and sticking to your sizes. Do you see how this works? Think back to the last time you broke your rules. Maybe you held onto a loser a little too long. Maybe you jumped into a trade without waiting for confirmation. How did it feel afterward? Did you kick yourself, swearing you'd never do it again? And yet, without consistency, you find yourself repeating the same mistake. That's why I say consistency is not optional, it's survival. Now, let's talk about the mechanics of it. Consistency means you decide in advance how much of your capital you'll risk on any trade, and you never exceed it. You set your stops before you enter, and you never move them farther away. You define the kind of setups you'll take, and you don't bend the rules just because you're bored or because a stock looks exciting. If you trade breakouts, you wait for the breakout. If you trade pullbacks, you wait for the pullback. Why would you suddenly switch methods in the heat of the moment? Wouldn't that be the same as tearing up your playbook in the middle of the game? I've seen men make fortunes and lose them just as fast because they could not be consistent. They thought a winning streak gave them license to take wild risks. They let success go to their head, and the market humbled them. Have you noticed that the market has a way of humbling men at the very moment they feel invincible? That's why consistency is your anchor. It keeps you grounded when things are going well and protects you when things turn against you. The beautiful thing about this rule is that it compounds over time. One consistent trade may not seem like much, but add them up, week after week, month after month, and you have something remarkable. It's like building a wall brick by brick. One brick looks small, but the man who lays bricks every day eventually has a fortress. Isn't that the kind of security you want for yourself? I'll give you another angle. Consistency earns you trust your own trust. If you say you'll follow your rules and then you do, day after day, you start to believe in yourself. That belief is priceless in this business. Because when the storm comes, and it always comes, you need to know you can rely on yourself. If you've been inconsistent, you won't have that confidence. You'll panic, you'll doubt, you'll hesitate. But if you've been consistent, you'll act with clarity. Which trader do you think survives the storm? And let me warn you, consistency is not about being right all the time. Nobody is right all the time. The best traders in history, myself included, were wrong plenty of times. The difference is that we were consistent in cutting our losses and letting our winners run. You see, being wrong doesn't destroy you, being inconsistent does. Have you ever heard a trader brag about being right more than 70% of the time? Sounds impressive, doesn't it? But let me tell you something, it doesn't matter if he's right 70% of the time, if the 30% of losers are big enough to wipe him out. Meanwhile, a man who is right only 40% of the time, but cuts his losses short and rides his winners, can end up far richer. That's the power of consistency in risk management. Doesn't that turn the usual thinking upside down? Consistency also teaches you patience. And patience, my friend, is a rare commodity in this business. Everyone wants action. They want to be in the market every day, every hour. But the consistent trader knows that waiting is often the best trade of all. He waits for the right setup, the right conditions, the right confirmation. When it comes, he acts decisively. When it's not there, he sits on his hands. Can you do that? Can you sit and wait without letting boredom push you into foolish trades? That's the test of a professional. I'll tell you a story. There were times when I sat in my office for days without making a single trade. The tape was there, the prices were moving, but the conditions I wanted weren't present. Do you know how hard it is to do nothing when the market is moving? It's torture for the undisciplined man. But for the consistent trader, it's just another part of the job. He knows that doing nothing is often the smartest move. And when the moment finally arrives, he is ready, with his capital intact and his mind clear. Consistency also applies to your record keeping. You must keep track of every trade, the reasons you took it, and the result. Over time, you'll see patterns in your own behavior. Maybe you do well in trending markets, but lose money in choppy ones. Maybe you make more money on breakouts than on pullbacks. Without records, how would you ever know? Do you think a serious businessman runs his company without keeping books? Then why would you run your trading that way? Another point, consistency, is the antidote to overtrading. Overtrading is the disease of the impatient and the greedy. They jump from one stock to another, one method to another, chasing every move. They exhaust themselves, pay endless commissions, and end up with little to show for it. The consistent trader, on the other hand, waits for his setups and ignores the rest. He might take fewer trades, but his account grows steadily. Which approach do you think leads to long-term success? There is also the matter of scaling. A consistent trader knows when to increase his size and when to hold back. He doesn't double his stake just because he's excited. He increases gradually in line with proven success. That's how you build a fortune without exposing yourself to ruin. Have you ever been tempted to bet big after a winning streak? That temptation is the enemy of consistency. And I'll tell you, many fortunes have been lost that way. Let's talk about wealth. Real wealth is not built in a single trade. It's built brick by brick, rule by rule, over years. The man who is consistent may not impress the crowd in the short run, but in the long run, he passes them all. He preserves his capital, compounds his gains, and lives to trade another day. Isn't that the kind of trader you want to become? Consistency also builds reputation. On Wall Street, men may talk about your big wins, but they respect you for your steady hand. If you're consistent, other traders trust you, brokers respect you, and your word carries weight. If you're erratic, no one takes you seriously. Which would you rather be? Now let me ask you this: what's stopping you from being consistent right now? Is it greed, fear, impatience? The truth is, the only thing standing in your way is yourself. The market doesn't care about you. It doesn't know your name. It just does what it does. The only thing you can control is how you respond. And the only way to respond intelligently is with consistency. Think of it this way. Every trade you take is a test. Not of the market, but of yourself. Will you follow your rules this time? Will you stick to your plan? Or will you let emotion dictate your action? If you fail the test, the market will punish you. If you pass, the market may or may not reward you on that trade, but over time, the rewards accumulate. Do you see why this rule is so powerful? You can't control whether a trade wins or loses, but you can control whether you took it for the right reasons, with the right risk, and in line with your plan. That's consistency. And over hundreds of trades, that consistency becomes your edge. Without it, you are simply a leaf in the wind. Now, don't misunderstand me. Consistency does not mean rigidity. You must adapt when the market changes character. But even your adaptation must be systematic. You study the new conditions, you refine your rules, and then you apply them consistently. What you do not do is improvise wildly in the heat of the moment. That's the difference between a professional and an amateur. Have you noticed that in life, the men who succeed are often not the most talented, but the most disciplined? Trading is no different. It's not about being the smartest man in the room, it's about being the most consistent. Intelligence without consistency is wasted, but average intelligence with iron consistency can build a fortune. Which one do you think matters more in the market? And here is a secret that few ever grasp: consistency creates freedom. At first, it feels like rules are chains restricting you, holding you back. But in reality, they set you free. Free from doubt, free from panic, free from the endless cycle of mistakes. Once you have a method and follow it, you no longer waste energy second-guessing yourself. You know what to do, and you do it. Isn't that the kind of clarity you're seeking? Let me repeat what I said earlier. Every dollar you have is a soldier. Would you send your soldiers into battle without a plan? Would you let them run wild, charging in every direction? Or would you lead them with discipline and consistency, maximizing their strength and minimizing their losses? The trader who is consistent builds an army that grows stronger year after year. The trader who is inconsistent sends his army to slaughter. Which commander would you rather be? So when you hear about the rule of consistency, don't dismiss it as just another slogan. Understand it as the very foundation of successful trading. Without it, you cannot last. With it, you give yourself the only real chance at wealth that the market offers. Consistency is the trader's shield. It keeps small losses small and allows profits to grow steadily. That one idea, if you grasp it, can change the entire way you approach the markets. People come into speculation with the wrong picture in their heads. They think it's about predicting the future, about being right on every call, about catching lightning in a bottle. But let me ask you something: what good is being right once in a while if you can't keep the money you make? What good is a single big hit if the very next trade wipes it out? That's where consistency comes in. Without it, your account is at the mercy of every whim and every emotion. With it, you have a shield, something that protects you from yourself, from the noise, from the endless temptations the market throws at you. When I say consistency keeps small losses small, I mean that literally. Every trader takes losses, there's no escaping that. The difference is in how you handle them. An inconsistent man takes a loss and hopes it will turn around. He adds to it, he moves his stop, he rationalizes. Pretty soon, what started as a small cut becomes a wound that bleeds his account dry. The consistent trader never lets it get that far. His rule is simple: take the loss quickly, take it cleanly, and move on. The shield of consistency is what prevents a scratch from turning into an amputation. Now, doesn't that sound like survival? And on the other side of the equation, consistency is what lets profits grow. Do you know why most traders never let their profits run? It's because they are inconsistent. They cut winners short. They jump out at the first sign of hesitation. They second-guess their own rules. They say they'll hold for a move, but then fear whispers in their ear and they sell too soon. The consistent trader does not play that game. If his rule says to hold until the trend is broken, he holds. If his plan is to pyramid carefully as the move goes in his favor, he does it without hesitation. This is how consistency turns an ordinary trade into a meaningful profit. Think of consistency like compound interest. One small, steady decision may not seem like much on its own, but repeated over weeks and months, it becomes a force that shapes your entire equity curve. Each time you cut a loss short, you protect capital for the next opportunity. Each time you let a winner develop, you add fuel to the fire. Over time, this is what separates the operator from the gambler. Have you noticed how gamblers always talk about the one time they made a killing, while the real traders talk about the process? That's not an accident. It's the difference between a story and a business. Let's get practical. Consistency starts before you even enter a trade. It's in the way you size your positions. Do you risk the same fraction of capital each time, or do you bet bigger when you're excited and smaller when you're afraid? If you do the latter, you are inconsistent, and sooner or later, the market will punish you. But if you size consistently, you never put yourself in a position where one loss cripples you. You live to fight another day. That's the shield in action. Consistency also shows up in how you pick trades. Do you know the setups you're looking for, Or do you change your approach every time the tape ticks? An inconsistent trader is like a man wandering through the woods without a map. One day he's chasing breakouts, the next he's buying dips, the next he's shorting rallies. He has no compass, no path, no way of measuring his own progress. The consistent trader, on the other hand, knows exactly what he's looking for. He has a checklist, and if the stock doesn't meet the conditions, he passes. That discipline is what keeps him out of trouble and positions him for the right opportunities. You may wonder, doesn't consistency make trading boring? And my answer is yes, it does. But boring is where the money is made. Excitement belongs to the gamblers. They chase thrills, they crave action, and they pay dearly for it. The consistent trader sees his work as a business, not a game. He repeats the same actions over and over, the way a craftsman repeats his strokes, the way a farmer tills the soil. Each act on its own may seem small, but together they create wealth. Would you rather have excitement or results? Here's another thing to consider. Consistency is what keeps you from overtrading. Markets are full of noise, endless little moves that tempt you to jump in. If you have no consistency, you'll be in and out all day, bleeding from commissions, worn out from stress, chasing shadows. But if you are consistent, you ignore the noise. You wait for your conditions, your setups, your moments. That's why consistency is not only a shield for your money, but also for your mind. It saves you from the exhaustion that breaks so many traders. And don't think consistency is only about discipline, it's also about confidence. When you know you are consistent, you trust yourself. You don't panic when a trade goes against you because you know you'll cut it. You don't hesitate when an opportunity appears because you know it fits your rules. That self-trust is priceless. Have you ever doubted yourself so much that you froze at the screen, unable to act? That happens to men who have no consistency. The market shows them something, but they don't know if they can trust their own judgment because they've broken their own rules too many times before. But when you're consistent, your own record becomes your ally. You look back and see that you have followed your plan time and again, and that gives you the confidence to act. Let me tell you something else. Consistency protects you in bull markets and in bear markets alike. When the crowd is euphoric, buying anything that moves, your consistency keeps you from joining the madness at the top. When the crowd is panicked, dumping stocks at the bottom, your consistency keeps you from selling in despair. You follow your rules, not the crowd. That is why the shield works. It defends you against the most dangerous force in speculation, the herd mentality. Do you see how vital that is? Think back to the traders you've known, or maybe to your own past. How many times did inconsistency cost you dearly? Maybe you swore you'd never average down, but then one day you did, and it blew up on you. Maybe you promised yourself you'd never chase a runaway stock, but then you broke the rule and you bought the top. Each of those mistakes comes from the same root, dropping the shield of consistency. And once you drop it, the market never hesitates to strike. Now consider the opposite picture. Imagine a trader who sticks to his rules no matter what. His losses are small because he always cuts them. His winners grow because he lets them. He doesn't overtrade, he doesn't chase, he doesn't gamble. Each month he makes progress, maybe small but steady. Over years, his account grows into something substantial. He is not at the mercy of the market because he has built a shield that protects him. Isn't that the picture of the trader you want to become? Consistency is not glamorous, but it is powerful. It won't make headlines, but it will make fortunes. It won't give you excitement, but it will give you security. It is the quiet force that allows small losses to remain small and profits to compound into wealth. And without it, no matter how clever you are, no matter how lucky you get, the market will eventually take everything back. Treat every dollar as a soldier, never send it into battle without a consistent strategy. That's not a fancy saying, it's the very heart of survival in this business. A man who doesn't respect his capital, who doesn't understand that each dollar is a unit of power, is already finished before he begins. Think about it, an army with no discipline, no plan, and no leadership will get slaughtered, no matter how many soldiers it has. The market is a battlefield, and your account is your army. If you don't lead with consistency, you're marching your men into chaos. Do you really expect victory under those conditions? Every time you place a trade, you're deploying troops. Do you send them in without a map, without a strategy, without knowing the terrain? That's what happens when you chase a tip, when you follow a rumor, when you buy because the crowd is excited. That's like ordering your men into a valley without scouting it first. The enemy fear, greed, volatility waits in ambush, and your soldiers never come back. But if you treat every dollar as a soldier, you respect it. You ask yourself, is this the right battle? Is this the right time? Is this the right formation? Only then do you send them forward. That's what a consistent trader does. Now, most people don't think of money this way. They see capital as chips on a table, something to play with. They talk about betting on a stock the way gamblers talk about horses. And like gamblers, they run out of chips. But the operator, the serious trader, sees capital as life itself. He doesn't gamble with it. He doesn't waste it. He deploys it with care, knowing that once a soldier is gone, it takes time and effort to replace him. Have you noticed how easy it is to lose money quickly, but how slow it is to earn it back? That's because you can send 1,000 soldiers into a bad fight and lose them all in a day. But to rebuild that army takes months, even years. Consistency is the general's discipline. A general doesn't wake up one morning and decide to abandon all strategy because he feels lucky. He has a plan and he follows it. He trains his men, he studies the enemy, he prepares his resources. A consistent trader does the same. He knows the setups he will take, the risk he will allow, the conditions he will require. Each dollar is sent into battle only when the conditions are favorable. Do you see the difference between that and the man who throws money into any move that looks exciting? Let me give you an example. Suppose you've built a rule that you never risk more than 2% of your account on a single trade. That rule is your formation, your battle plan. If you respect it, your soldiers never die in waves. A loss here or there is acceptable, it's the price of doing business. But if you ignore that rule, if you suddenly throw 10 or 20% of your army into one uncertain fight because you feel confident, you risk disaster. And when disaster comes, as it always does for the careless, you don't just lose a skirmish, you lose the war. Have you ever done that? Put too much on one idea because you felt certain. If so, you know how costly that mistake can be. Another angle, treating every dollar as a soldier, changes how you see losses. When you lose a trade, you don't curse the market or blame your luck. You see it as the cost of battle, the sacrifice of a few men so the army can live to fight again. A consistent trader accepts those casualties without emotion. He knows that no general wins every battle, but the war is won through discipline and planning. An inconsistent trader, on the other hand, takes losses personally. He becomes reckless, desperate to get even. He throws more soldiers into hopeless fights, and soon his army is destroyed. Which one are you? This idea also protects you from greed. Greed is the commander who wants victory at any cost, who keeps pushing his men forward long after the battle is won, who chases glory and ends up leading his army into ruin. In trading, greed makes you add to a position without a plan or hold on to a winner long after the trend is broken. Consistency keeps greed in check. It tells you when to advance and when to retreat. It reminds you that soldiers must be preserved, not wasted. Isn't that what you want for your account, to grow stronger, not weaker, over time? Think of the traders who go broke. Their story is almost always the same. They had an army of capital, maybe a large one, but they treated it carelessly. They made exceptions to their rules. They gambled. They hoped.